All right, folks, my next guest published his 2025 market outlook at the start of the week, and I do want to talk about him. Also, his track record has been absolutely phenomenal. What I love about David Nelson is that he blends traditional Wall Street valuations with the sort of stuff that Anastasia and I just talked about, because this is a different kind of market, folks, and you have to be able to adapt. So let's bring him in from Belpointe, their chief market strategist, David Nelson. David, first I'm going to give you props because you've been in Broadcom for at least a year. You mentioned it on the show at least a year ago, but more than once. So are you updating your thesis on it? Are you updating your target? You're still in it, right?
I'm still in the name. And, it was interesting last night when they reported. Initially, the reaction was pretty muted. It was only up about 1%. It's what came out on the call that really drove the action. 90% sequential growth, that's great. But you just hit on it just earlier. Talking about an addressable revenue market, $90 billion potential. That's
folks, that's 22% today. 22% today. I love it. And by the way, I had Ivana Delevska on earlier in the week. We talked about this. I love it. My subscribers own it. I just, what's amazing to me is that, we talk about traditional Wall Street analysis. And as I was reading through the thing, I saw VMware mentioned in there. I forgot they had acquired them. These aren't the same companies, right? I mean, we look at Broadcom and say, well, the stock is up 100%. They might have made acquisitions. They might have made moves in their business. People have to think about that.
There's been a lot of acquisitions here, and it is a big company. I think they just crossed $1 trillion today. So it could be the Mag 8, at some point. It's a pretty exciting company. It's a pretty exciting technology. And when you think about how every company is starting to adopt this, the whole idea of the AI infrastructure petering out, that's likely to go for years. In fact, it could be quite impressive in the out years.
All right, I want to talk about a couple of things. Your approach to helping investors. One thing that you have is you talk about the tools that you use. I think we have a chart of them because I don't remember them all up. Okay, we don't have time to go through all of them, but I started though with the risk-free rate at the opening of the show. How do you, and I was asking Anastasia the same thing, as someone who understands traditional valuation metrics, how do you juxtapose that?
This is the Achilles heel right here. If the risk-free rate starts to rise, we're going to have a very different conversation about the near-term prospects for stocks. The Fed has done their job. It doesn't look like we're going to get the cuts that we have. What I'm concerned about, and what I keep my eye on, is the long end of the curve, because there's a lot of dynamics there that could push that up closer to 5%.
Is there a ranking? Okay, you've got 7 things here. Is there a ranking? Does one outweigh all the others?
It's not up on this chart, but estimate revisions for me are the holy grail.
Right. I think we do have a chart of that. We had a chart of that. But anyway, the holy grail estimates, talk about that quickly.
Because estimate revisions tell me that the analysts are playing catch up.
Right.
They're trying to catch up to the fundamentals of the stock. And the other thing we have to realize as investors is that it's not just the fundamentals. If it was just the fundamentals, stocks like Apple would be trading 80 points lower. It's about the quality of the company, the future that Anastasia was just talking about. We have to pile that all in together and come up with an investment thesis.
Thanks a lot, man. I'll tell you what, you've been hot as a pistol too. Congrats. No, but I love that you're a traditionalist, you're a quant, but you also know how to, you're in this to make people money, not just gather assets under management.
It's not just one thing. We have to do it all.